The US dollar is trading at the highest level since July 2020 in view of its safe haven status on the back of the escalating crisis between Russia and Ukraine. Investors are alarmed by risks of runaway inflation and disruptions in supply chains. Such headwinds are sure to leave an imprint on the global economy and could discourage the Fed Reserve to raise the funds rate by 50 basis points at a time at the policy meeting in March. Let's watch a video calendar on InstaForex TV channel to find out what other events might influence trading sentiment this week. On Thursday, experts at Market Economics will release final services PMIs and composite PMIs for major European economies. The revised PMI readings are expected to be higher than flash estimates. However, judging by the final manufacturing PMIs that were published earlier, the revised prints happen to be a bit lower than the preliminary data. So the worse than expected services PMIs could pin the European currencies at lows that have been badly bruised by a spike in energy prices. A batch of economic data from the United States will brighten up the day. Analysts predict that business activity in the US non-manufacturing sector is gaining momentum. The coronavirus crisis is receding, so businesses in the services sector are getting back on track. Such improvement will certainly boost demand for the US dollar and the dollar-denominated assets. As usual on Thursdays, market participants will keep track of a weekly update on US unemployment claims for the week ended February 26. The overall trend remains positive as jobless claims have settled at the pre-crisis levels week after week. This information will provide the US dollar with extra support in anticipation of the government data on the American labor market. The US non-farm payrolls are on investors' radars on Friday. Analysts have made very optimistic forecasts. The unemployment rate is expected to edge down again to 3.9% last month. The number of employed Americans could have increased by 400,000 in US public and private sectors, excluding farm employment. Such robust hiring confirmed that the US economy has not suffered badly from the Omicron wave. In turn, the Federal Reserve could exercise the option to raise the key policy rate by 50 basis points at the policy meeting on March 16. Importantly, under the current geopolitical uncertainty in East Europe, the Federal Open Market Committee will hardly venture into such aggressive monetary tightening. As the Fed Chairman Jerome Powell said on Wednesday, the central bank would begin carefully raising interest rates, even though the national economy has proved its strong resilience. So, a cautious rate hike of 25 basis points is in the cards. We carefully monitor developments in financial markets, analyze the information and share the analytics with you. Subscribe to our channel and see you online soon.